Alright everyone, welcome back to the channel. My name is Jamil, and today we're going to do a quick and simple breakdown of everything that's been happening in the wild world of cryptocurrency. It's been another one of those weeks where if you blink, you miss something huge. The market has been a total roller coaster, doing its usual up and down dance that keeps us all on our toes. We've seen some small but notable increases in the prices of both Bitcoin and Ethereum, which is always a welcome sight after a period of uncertainty. It's these little green candles that give us a hint of what might be coming next, and it's definitely something we need to pay close attention to. What's really catching my eye though, is the growing interest from the big players. I'm talking about the major corporations and institutional investors who are starting to pour serious money into this space. It's not just a trend anymore, it's becoming a fundamental shift in how the traditional financial world views digital assets. This isn't just retail investors like you and me anymore. The big fish are jumping in, and that changes the entire dynamic of the market. This influx of institutional capital is a massive vote of confidence and is playing a huge role in stabilizing and legitimizing the entire ecosystem. And the numbers, well, they speak for themselves. The total market capitalization of all digital currencies combined is now hovering around a staggering $3.34 trillion. Let that sink in for a moment. That's trillion with a T. This isn't some niche underground market anymore. We are talking about a global asset class that is commanding serious attention and serious capital. So, stick around as we dive deep into what's driving these movements, what the big players are doing, and what it all could mean for your portfolio. We've got a lot to cover, so let's get right into it. So let's start with one of the biggest signals in the market, what the big investors or whales are doing. And right now, they are buying. A lot. We're seeing a significant accumulation of both Bitcoin and Ethereum by these large-scale investors. This isn't just pocket change. We're talking about massive orders that can move the market. When these whales start buying in bulk, it's often seen as a bullish signal. They have access to research and data that most of us don't, so their actions carry a lot of weight. They're not just speculating, they're making calculated long-term bets on the future of these assets, and that tells you something about their confidence level. What's particularly interesting is the activity around Ethereum. The amount of Ethereum purchased by these major players recently hit its highest level in over 6 years. 6 years! That's a huge deal. This surge in accumulation suggests that these sophisticated investors see immense potential in Ethereum, perhaps due to the upcoming upgrades, the growth of its DeFi ecosystem, or its role in the NFT space. They are stocking up, getting ready for what they believe is the next big move up. It's a powerful indicator that despite the short-term price volatility, the underlying conviction in Ethereum's long-term value proposition is stronger than it has been in a very long time. Now let's talk about the factors that are really stirring the pot and causing all this price volatility. It's a mix of politics and the constant stream of news about new rules and regulations, especially concerning exchange-traded funds, or ETFs. The crypto market is still incredibly sensitive to regulatory news. A single headline, a tweet from a regulator, or a rumor about a new policy can send prices soaring or tumbling in a matter of minutes. This uncertainty is a double-edged sword. It creates opportunities for massive gains, but it also brings significant risk. The ongoing discussions in Washington and other global capitals are shaping the future landscape of crypto. The saga of the spot Bitcoin and Ethereum ETFs is a perfect example of this. Every piece of news, whether it's an approval, a delay, or a comment from an SEC official, continues to have a direct and immediate impact on market sentiment and prices. We saw how the approval of the Bitcoin ETFs pushed the market to new heights, and now everyone is watching closely for what happens with the Ethereum ETFs. This regulatory tug-of-war creates a constant state of suspense. Investors are hanging on every word, trying to predict the next move. Until we get clear, established regulations across the board, this kind of news-driven volatility is just going to be part of the game we have to play. On the topic of regulation, there's some potentially very positive news brewing, specifically around stablecoins. The US government is actively working on creating a clearer regulatory framework for these digital dollars. This is a massive step forward. For a long time, stablecoins have operated in a bit of a gray area, which has made some larger institutions hesitant to fully embrace them. Clear rules would bring legitimacy and security to the stablecoin market, which is fantastic news for major players in the space like Circle, the issuer of USDC, and the publicly traded exchange, Coinbase. This could unlock a whole new level of adoption. And speaking of Coinbase, they're not waiting around for the ink to dry on the legislation. They are actively pushing the boundaries of what's possible. They've recently launched a new service that allows online merchants to accept stablecoin payments directly. Think about that. You could soon be buying your favorite products online using a stablecoin like USDC, with near-instant settlement and much lower fees compared to traditional credit card payments. This is a game changer for e-commerce and a huge step towards integrating crypto into our everyday financial lives. It's a practical, real-world use case that could drive massive mainstream adoption. Here's a fascinating trend that's emerging from the crypto mining sector. As you know, mining cryptocurrencies like Bitcoin requires immense computational power. Miners have warehouses full of powerful GPUs, or graphics processing units, that are designed for exactly this kind of heavy-duty number crunching. But with the profitability of mining fluctuating, some of these miners are getting creative and looking for new revenue streams. They are starting to pivot and repurpose their powerful hardware for a different but equally demanding task: artificial intelligence. The AI industry is absolutely booming right now, and one of its biggest bottlenecks is the sheer demand for computational power. Training complex AI models requires the exact same kind of hardware that crypto miners have in abundance. So, instead of mining for blocks on the blockchain, some miners are now renting out their GPU power to AI companies and researchers. This is an incredibly smart business move. It allows them to diversify their income, hedge against crypto market downturns, and tap into the explosive growth of the AI sector. It's a perfect example of the synergy between two of the most disruptive technologies of our time. For a long time, the crypto conversation has been dominated by one name: Bitcoin. And for good reason. But lately, there's a growing whisper in the market, a change in sentiment. People are starting to look beyond Bitcoin and are getting increasingly excited about the potential of altcoins. The term altcoin season gets thrown around a lot, and it refers to a period where alternative cryptocurrencies outperform Bitcoin. There are signs that we might be on the cusp of such a period. Investors are starting to diversify their portfolios, seeking out the next big thing. This growing interest is being fueled by a few factors. First, the technology behind many altcoin projects is maturing. We're seeing real innovation in areas like decentralized finance, smart contracts, and scalability solutions. Second, as Bitcoin's price gets higher, it becomes less accessible for smaller retail investors who are looking for those explosive 100x gains. They see more potential for exponential growth in smaller cap altcoins. This shift in focus is healthy for the overall market. It shows a maturing ecosystem where value is being recognized across a wide range of projects, not just the original cryptocurrency. Alright, let's zoom in on the king itself, Bitcoin. Currently, the price has been trading in a bit of a range, consolidating after its recent run-up. We're seeing it bounce between key levels as bulls and bears battle for control. The critical support level to watch, the floor that we really want to see hold, is right around the $67,000 mark. If it can stay above this level, it's a strong sign of underlying strength. On the flip side, the major resistance or ceiling that it needs to break through is that psychological barrier of $72,000. A decisive break above that could signal the next leg up. So, what are the experts saying? Well, despite the short-term choppiness, the long-term outlook remains overwhelmingly bullish for many analysts. The demand from the spot Bitcoin ETFs continues to be a powerful tailwind, constantly absorbing supply from the market. Many predictions are still calling for Bitcoin to reach well into the six-figure range, with some targets at 100,000, 150,000, or even higher by the end of this cycle. Of course, these are just predictions, but they are based on the fundamental shift in demand we're seeing. The key takeaway is that while short-term moves are unpredictable, the long-term thesis for Bitcoin's value seems to be strengthening. Now for the challenger, the queen of crypto, Ethereum. So similar to Bitcoin, Ethereum's price has been consolidating, just trading within a defined range as the market waits for its next catalyst. The current price is hovering around the $3,800 level. The key support to keep an eye on is down around $3,730. We really need the price to stay above this line to maintain its bullish momentum. The resistance it needs to conquer is up at the 3,900 mark. Smashing through that level could totally open the door for a retest of its previous all-time highs and honestly, even beyond that. The expert predictions for Ethereum are incredibly optimistic, maybe even more so than for Bitcoin in the short term. The big catalyst everyone is waiting for is the potential approval and launch of spot Ethereum ETFs. If and when that happens, it's expected to unleash a wave of institutional demand, similar to what we saw with Bitcoin, but potentially even more impactful, given Ethereum's staking yield. Many analysts believe ETH could see a significant price surge following the ETF launch, with some price targets reaching as high as 5,000, 8,000, or even 10,000 in the medium to long term. The potential is just massive. Let's shift gears and talk about XRP. It's been making some noise recently with a respectable 3% rise catching the attention of traders. XRP's primary use case, and honestly its biggest selling point, has always been its focus on facilitating fast and cheap cross-border payments. It aims to disrupt the traditional banking system, like SWIFT, by providing a more efficient alternative for international transactions. This real-world utility is what gives XRP its dedicated community and its long-term potential, even though it has faced some regulatory headwinds. However, the path forward isn't without its challenges. From a technical analysis perspective, XRP is currently facing a very tough wall of resistance. This key resistance zone is between $2.26 and $2.38. This is a price level where, in the past, a lot of selling pressure has emerged, pushing the price back down. For XRP to truly break out and begin a new sustainable uptrend, it needs to gather enough momentum to decisively break through and hold above this zone. All eyes are on whether the bulls can muster the strength to overcome this significant hurdle. Alright, let's do a rapid-fire round on some other popular altcoins to see what they've been up to. Solana, or SOL, has been showing impressive strength, continuing its push as a major Ethereum competitor. Tron, or TRX, has been quietly steady, maintaining its user base in the decentralized application space. A newer player, SUI, is making waves with its unique architecture and is gaining traction. Chainlink, or Link, the essential Oracle network, continues to be a critical piece of DeFi infrastructure, and its price often reflects the health of the broader ecosystem. Uniswap's Uni token is one to watch as discussions around its fee switch continue, and of course we can't forget the others. Dogecoin, or Doge, is still a major player, driven by its massive community and occasional celebrity endorsements. Cardano, or ADA, is continuing its slow and steady development, focusing on academic rigor and a robust roadmap. Polkadot, or DOT, is pushing forward with its multi-chain vision, aiming to connect different blockchains. And finally, Fetch.ai, or FET, is riding the AI narrative, seeing significant interest as a key project at the intersection of artificial intelligence and blockchain technology. It's a diverse market out there with a lot of different projects trying to build the future. Now, before we wrap up, I need to put on my serious hat for a moment and give a very important reminder. We've talked about a lot of exciting developments, bullish predictions, and massive potential. It's easy to get caught up in the hype and excitement, especially when you see prices moving up. However, it is absolutely crucial to remember that the cryptocurrency market is one of the most volatile financial markets in the world. Prices can and do change incredibly quickly. What goes up can come down just as fast, if not faster. This video and everything we've discussed is for informational and educational purposes only. It is not financial advice. I am not a financial advisor. You should never ever invest more money than you are willing to lose. Always do your own research. Dig deeper into the projects we've talked about. Read their white papers, understand their technology, and evaluate their long-term potential for yourself. Be careful, be smart, and make informed decisions that are right for your own personal financial situation and risk tolerance. Please, invest carefully. So there you have it, a complete rundown of the current state of the crypto world. As we've seen, the market is a living, breathing thing, constantly influenced by everything from institutional adoption to regulatory news and technological innovation. The key takeaway is to always remember just how volatile and unpredictable this space can be. The potential for high rewards comes hand in hand with high risk, And it's a reality that every single investor needs to be comfortable with before putting any of their hard-earned money on the line. Navigating this market requires a steady hand and a clear head. That's why I can't stress this enough. Please do your own thorough research. Don't just take my word for it, or anyone else's on YouTube for that matter. Take the time to understand the fundamentals of any asset you're considering. Be cautious with your investments, diversify your portfolio, and never chase hype without a solid plan. Making informed, careful decisions is the absolute best way to protect yourself and position yourself for potential success in the long run. Patience and diligence are your best friends in the world of crypto. Thank you so much for sticking with me through this deep dive today. I really hope you found this breakdown helpful and informative. If you enjoyed the video and want to stay up to date with all the latest news and analysis in the crypto space, please smash that like button and make sure you subscribe to the channel so you don't miss out on future updates. It helps the channel out more than you know. Thanks again for watching, and I'll see you in the next video.